Welcome, everyone, to the Amazon earnings watch party. We are going to monitor when Amazon drops their earnings report and then scour the report, try to get to the details that are going to drive this stock higher, or is it going to go lower? Judging from the pre-market, the market is not looking good for Amazon. Look at that. Holy smokes. What's going on out there, stock market? Amazon's down 4.7, and it has not been a pretty picture this year for this stock. If we look at the 1 month, it's down 2%. I thought it was going to be worse. Let's look at the 5 day, the one week. Yeah, that's what I was thinking I was going to see. It's been a little bit of a bloodbath out there. Last week we had Microsoft announce. I thought the earnings were good, but the market didn't. It sold it's since then. I think they announced on Wednesday, if I'm counting my days right. They're down 18%. I mean, look at this red, breathtaking. Look at this red in software. Man, that is not looking good at all. Apple standing up really tall. That's one of your positions, right, Daryl?
Yeah, I've owned that for a long time. I sold out at the beginning of last year, missed all the downturn last year, but then I started picking positions back up.
There you go. Nicely done. So we'll see what stock we get today in after hours. I am guessing that Amazon's going to rally after, because I think the stock I think investors are bracing for the big CapEx spend. Okay, I am too. I get it, but they take that spend and then rent it out to those that are on AWS. You notice the hat I'm wearing today, Daryl?
Yep, check that out. Love it.
This gives me a little more credibility that I could talk about AWS and Amazon. But AWS is spending a boatload of CapEx, and they get to rent that out to customers. So it's not like they're consuming it and using it for their business purposes. I'm sure they are to some extent, but most of it is for other customers, whether it be OpenAI or whoever else wants to buy that cloud infrastructure from Amazon, they'll rent it out. So it's actually the growth in AWS. It's setting up for a business that's going to be really valuable for the next 10 years. So I'm not too worried there. Now, the earnings are going to drop like a minute after. Did you have any charts to show on Amazon while we wait?
Sure.
Perfect, because we got like 100 people already on the stream. We are going to be cooking with gas on this one. Go ahead, Daryl.
So I just released a video a couple hours ago for an earnings preview, and I went over these charts, but we'll quickly go over them again. So they've been on a trend since the tariff announcement lows. I have the trend line connected to the low we saw in October. And I may actually be able to adjust this a little bit because we have more points touching right here than we did where I originally had it set. So let's set it there. So given that information, they've been trading above that trend line, touched it many times since then. And today is the first day that they would really be trading underneath that trend line for the past however many months. They are testing the 200, which is upward sloping. The 50-day is upward sloping. The 5 days rolled over and down turning. The 50-day is still up sloping. The RSI has moved below 40. We're currently at 36. The PPO is just moved into negative territory. It was in positive territory. We've been on a sell signal for the last couple of days. Money flow is still positive. Over this time frame, we had a lot of accumulation. We had a big drop and then kind of leveling out here. So that's one chart. I do have red lines here that are resistance and some green lines here that are support. The first support level, besides the 200, would be around 208 and 199. So 199 to 208. If it breaks this 200 and sustains a break below there, that's where we'll be looking. With a company like this, I always love to go out and look at many years. So this is a trend channel that goes all the way back to 2007. They've traded within this trend channel most of the time. A couple times they get outside the trend channel to the upside. They haven't really been below the bottom of the trend channel with the exception of 2008. They are trading below the middle half or in the lower half of this trend channel. But this just shows me that this company executes over a long period of time and the share price reflects that. Let's look at a 5-year chart. And we have another trend channel. This is a much shorter duration that starts in 2023. I also have 2 auto support resistance lines here with some red arrows showing where it found resistance at the upper and the lower one. Some green arrows where it's found support at that line. We have fallen out of this particular channel, but this is short term. So that's something to keep in mind. It is a short term. So let's see what else. I don't think I have any more charts except the intraday charts, which we'll be looking at as they drop earnings and see the market reaction.
All right. So let's take a look here. So I've got my valuation schedule ready to go. It's switch screens here. Amazon's one of those stocks that you gotta look toward the future. So immediately the cash flow, they gotta improve it because it's been kind of brutal for a couple of quarters. For the trailing 12 months, it's been really low. So we got to see a higher rate of free cash flow. We are 1 after the hour here. Let's see if we've got any earnings that are popping up here. So let me know if you see any news that they announced their earnings. So here's Q3.
While we're waiting, one of the things that I'm looking for is the AWS growth. We need to keep that above 20 to justify this AI spend. We'll get the first look at the margins. And we also want to see how they're using AI to boost their revenue on their video ads. So those are 3 things that I'm looking for.
Yep. So the market's going crazy on the stock. What's going on? I said higher. What's going on? It's coming down. Daryl, what's going on with the stock market? It's only losing money these days.
Okay,
Oh,
they did report.
Oh boy, it's not
Looks
pretty.
like they missed by a penny on the earnings. That was on Yahoo. I'm waiting for Seeking Alpha to post the earnings.
No, it's not there. Well, as soon as we get that earnings detail, we can go over it. The stock is down 8.5%. Wow.
The implied move was 7.5.
Oof, brutal. Yeah, this one's getting smashed. What happened? So Amazon earnings are out. So earnings per share, $1.95 versus $1.97. Revenue was higher than estimated. So web services, 35 billion expected. So these are the expected numbers. So let's see where we're at once we see the report. So welcome everybody. We've got a lot of people joining. We appreciate that very much. We're going to go over the Amazon earnings once the reports are being made available. For now, we're just trying to refresh. I'm trying to refresh my screen, and it's not working yet.
Anderson said his wife ordered some more from Amazon this week to help on guidance. I think my wife
Very good.
does that about 3 times a day.
The support is appreciated. Man, Amazon, come on. Need some details.
Yeah, they're going to all the big boys first.
Yeah. I guess they are. So over the
There
1
they
year,
are. They finally come out. I
they
see
finally
them
came
now.
out. Are you seeing them on their website or?
I'm going to their press release right now.
Okay.
If you want to share my screen.
Yeah.
So net sales increased 14% to $213.4 billion in the fourth quarter, compared with $187.8 billion in the fourth quarter of 2024. This excludes a favorable impact, low dollar, in exchange rates. North American segment sales increased 10% year over year. International sales 17% year over year. AWS sales increased 24% to $35.6 billion. Operating income increased There were 3 special charges. Okay, for the full year, net sales increased 12%. AWS was 20% year over year. So they're having their fastest growth in 13 quarters. So they're growing at 24%. Advertising grew 22%. Okay, and there's the capital expenditure. So 200. They were the most of all of the hyperscalers. I think they spent 195 this year. So this is a pretty small increase compared to like Google. Google went from 93 and they're expecting 175 to 185 billion this year. So that's a smaller increase. It's still some big money.
Incredible. And yesterday, when Google was talking about their CapEx, the NVIDIA stock and the Broadcom stock, it was going up higher as they were stating that. So
Yep. They've had a lot of product introductions, and I covered some of that in my video today too, and they're listing them all here. So let's get down to the charts. That's probably what you want to see.
definitely
So,
cash flows.
okay, is that where you want to go first?
Yeah.
Yep, we're looking at those. Okay, tell me where you want me to.
So cash from operations. So go to cash from operations.
Where do you see that? Keep going down.
So no, you got to go up.
Oh, I'm sorry.
Right there. You just passed it. Okay. So
Okay.
down so see that 139,664. Okay.
Okay.
So 139,614. And do you see a CapEx number? There it is. Okay, got it. Oh, geez, man, their cash flow is like abysmal.
Yeah, they're eating up about 93% of their cash flow.
Jeez, it is. It's a rough one. That's a bad cash flow report. Okay, and so that was the big one. They're not doing well. It's not good. So I've got that. And on their earnings per share, what was their earnings per share for the full year?
I thought for the full year. Is that going to be here? This is cash flows. I don't see an earnings statement.
Oh, really? Okay. So let me see if.
Unless maybe I scroll down a little bit more. Let's see. Okay, statement of operations. Okay, yeah, this is the table that has that. Let me enlarge this one.
Okay.
Go down to the EPS.
There it is, 729.
Yeah, 2025. Yep, 729. You need the outstanding shares.
No, I've got that.
Okay.
Just the numbers look awful. Let me share my screen.
Okay.
So with Amazon, it's a tough one to model because their cash flows just dropped like big time. These guys could produce 70 to 90 billion dollars of free cash, but they're putting it back in the business and making their statement of cash flow look really, really bad. So you got to use your imagination in it. Once they stop investing, where will their cash be? So I'm going to have to put some thinking into that and kind of, put a model together that I think is going to be accurate. So I'll read through their earnings once it's made available and then adjust that. If we look at earnings per share, it is priced, if you're willing to pay a PE of 32, if you really believe in Amazon, it is priced okay. And I ran it through my app. My app is saying on cash flow, it is overpriced. And on earnings per share, it's being discounted. So I'm trying to test my app over and over again to see where I run into problems and then go fix the problems. So it's not a good day to be an Amazon stockholder. And during trading, it went down 4.55%, and after hours down 6.5%. Man, this one's a tough one. And
they are moving back off the bottom. So Genetic Smite is asking, is it bad because of the CapEx? And my answer to that would be, I think the market investors are hyper focused on CapEx. They have been since Meta announced last quarter. And even before that, they were concerned about it, but it really exposed itself when Meta reported. Then we saw it when Google reported yesterday, and now we're seeing it again. We saw it with Microsoft too. So they are hypersensitive to CapEx right now.
Yeah, I think I mean, I can understand why investors are concerned. You're seeing a lot of capital being put into AI, but are we seeing like a drastic increase in revenues? Well, Amazon numbers, they grew as you expected, but it wasn't like all of a sudden they're growing instead of 15% growth. Now they're growing at 30%, which would be amazing. We're not seeing that. And with Alphabet, it's the same thing. They're growing as expected, but it's not like a big bump in growth. The one company that did have really impressive growth was Meta. I mean, their growth just accelerates even though they're big. So Bo, is this a buying opportunity for Amazon? You know, I'm trying to kind of process the situation, Bo. So give me a little bit of time, and then I'm going to answer that question. I want to make sure that I'm not missing something important. Here we go. We finally get the earnings. Okay.
Yeah,
So I'm going to go with
technically, Bo, I think it is a buying opportunity, but we need to see, what the fundamentals are really telling us. But just from a chart perspective, it does look like a pretty solid buying opportunity. I
yeah.
have pretty good support at that 200 level.
Okay. For the fourth quarter, net sales increased 14% to 213 billion. Okay. That's big growth for a company that size, right? 14% for the full year would be $120 billion. So that's a lot. They're growing internationally faster by 17. AWS is growing by 24%, which is fairly incredible. And this is for the quarter, right? So 135 times 4 is going to be 140. I guess 142. That's a big cloud business. If I remember right, it was for the quarter. Alphabet was 17. So Alphabet has a $68 billion business where Amazon's at 142 billion. That's how big the AWS business is. Net income in the quarter came full year. For the full year, they grew at 12%. AWS, you're seeing a 4 percentage point bump on growth, right? So you see the quarter has 24%, where the full year is at 20%. So I guess we are seeing that AI acceleration in AWS, that there's more being bought from AWS. All right. So operating cash flow increased 20%, but they turned around and spent it all on GPUs. And the free cash flow decreased to 11 billion. Oof, brutal. Driven by year-over-year increase of $50.7 billion in property and equipment. Yeah. Okay. Okay. So AWS is growing 24%. That is very good. Okay. So they have their custom chips.
Yes.
Okay. Guidance. So they're going to grow 11 to 15%. So that's good. It's not great. That 11% is a little bit of a concern. Okay. And here's the big increase from here to here. And then they're saying they're going to spend 200 billion in 2026. Oh man. That's tough. It's a lot of money, Amazon. Okay, so here's their statement of operations, income statement. So they're approaching $1 trillion in overall revenue. So they keep growing. They're growing really, really, really well. So that's good. And they are profitable. The CapEx, they do get to capitalize and then depreciate it. So this will continue to be a positive number. Now, earlier, somebody asked in the chat, and I'm going to go through the chat questions in a little bit. Let me just kind of read this and then be able to have enough information. So North America, it said that internationally, this is where they're growing faster. And it's not as big of a number, by the way. This is for Amazon. 12 months, 29. Oh, this is the operating income. Okay, so the revenue went from 387 to 426, and then internationally they're up to 162. So that's a pretty chunky number. And here's AWS, 128 billion. And if I take the last quarter and multiply the times 4, because it's cloud infrastructure, it's not like companies turn it on and then turn it off. They turn it on and they keep it going for a while. So this number is looking really good. Okay. Cash. So they've got $123 billion in cash. This number is going up. Their balance sheet is going up with property and equipment. Long-term debt did go up, not a whole lot, just 13 billion. Long-term leases did go up, not that much. Okay. All right. See, here's the operating cash flow, right? That truly is like, this is how much cash the business is producing. If we didn't spend any money in CapEx, we could drive a lot of that toward the balance sheet. But this is where they're just really spending a lot of money. Yeah. Okay. All right. So that's a lot to process. And I think as I look at Amazon, I got to start looking at it for this period of time where we're in this AI build out, is so long as the operating cash flow keeps going higher, I'm going to depend on just looking at earnings per share, because this number is so, out of sorts that I could try to model it, but it'd be a guess. That'd be my my best analysis is, well, at what point is the cash flow going to come back? So this one here, I think I'm going to depend on earnings per share, because if you look at the two sides, I think the app really shows it well. If you go cash flows, you just can't get to the stock price. No way. But if you look at earnings per share, it's priced well. And in fact, if it's dropping in the after hours, it's looking better. Are they going to make more money in the future? Yes, because they're going to be able to capitalize all this property and equipment and show an even better earnings per share number. And at some point in the future, the cash flow will be there. So I still think Amazon is an opportunity. I think that the AWS business is one where once customers go to AWS, they're going to stay there for a long time. That's going to be a very durable revenue. And that said, when we update all the numbers, And I'm willing to go 32 PE on Amazon because of their growth. Their growth is excellent. So now there is one number I got to check, which is the growth rate. Let me take a look at. I'm looking at stock analysis in the forecast tab to see. Yeah, 15 is good. It's a little conservative, but it's the number that I want to go with. All right, so that's what I'm going to go with on a valuation. For now, I'm just going to depend on earnings per share. And each stock, right? We got to make those decisions qualitatively, which is, if now is Amazon doing something terrible in building out AWS? No, it's a really good idea. It's just hard. It's kind of like a startup, right? The first 4 years, 5 years, they don't make any money. They burn a lot of cash, but they're building something. And that's what Amazon is up to, is they're building a gigantic cloud infrastructure business, and it's taking a lot of capital. And once they get done building, it's going to be massive. So that's where I'm at with Amazon. Your thoughts, sir?
I'm kind of with you. I know the market investors are, they've never seen numbers like this before. These are big numbers. So I can see why they're a little apprehensive. But I cannot believe, considering Amazon's performance over 25 years, Meta's performance over their lifetime, with the exception of a couple hiccups, and Microsoft with their build out, I cannot imagine that as many scientists as they have employed, that they are all making the wrong decision. I just cannot believe that. I think they're probably way ahead of the average investor in knowing what they have to do to be successful in the future. And I'm going to have to trust that they do that.
And I do trust what they're doing. Just the magnitude of this business, right? Right now, we just finished this year. In 2026, they're going to be an $812 billion company. They're growing that top line by close to $90 billion. That's massive growth. I mean, that's a big business. That's like almost 2 Ubers. You grow by 2 Ubers. It's like an acre, of land. I don't even know what that is, but these guys here are growing by that magnitude. And they're doing it by lowering their PE ratio. Now, looking at Amazon, if they become a $1.2 trillion company in 2030, and they're still growing at 11%, they're not going to have a PE at 12.5. They're going to have a PE of 25, 35, right? So I think it's a good long-term stock. Like the next 5 years, the stock will deliver gains. There's some things that you can't depend on finance metrics and valuations. The power of a business, the true moats, the e-commerce business is like so sturdy. Can anybody challenge Amazon's e-commerce in the United States? Nope. The AWS business is also very, very, very sturdy. So I think they're going to hit these numbers, and I want to go for the ride with Amazon. It's going to be a long-term hold for me. I've been buying into shares. I still want to buy into shares is my initial plan on Amazon. And any other chart data you want to go over?
They are recovering slightly off that low. They got down below 200. They're back up to 207 at the moment.
The stock, let me go over the chat, and then I'm going to go over Google because it really recovered nicely.
Yep.
All right. I'm going to go from the top to the bottom because we have a lot of messages. Thanks, everybody. We've got over 200 people on the stream watching this earnings. So yeah, Coinbase got destroyed today. Sell off and Chime, rough. Yep. It's rough out there, folks. But remember, keep your wits, keep analyzing stocks. It may be this is the last time we see Amazon at around $200 a share. It may go lower, but if it's 500 in 2 years, you're like, oh man, remember back in the day, back in 2026, when we heard that earnings announcement. So just remember, let's do our analysis. Let's kind of look at the business clearly. All right. The crypto market's down 50%. Crypto's getting rocked. All right. So
yeah, I'm seeing a lot of discussion about healthcare too, and I got CNC down 15% right now. So I wonder what's going on with healthcare all of a sudden again. Wonder if
geez.
there was another announcement.
All right. I'll turn my attention to that in a little bit. Yeah. So everybody's on top of, what's going on with Amazon. All right. Looks good. And I think, Bo, I answered your question, which is it is a buying opportunity, but it's a long-term investment. Okay. It's not I think I'm going to make money this quarter on Amazon. I just think that I'm parking capital so I could wake up, like in the case of Meta. I wake up and my money tripled in 3 years, 4 years. That's what I want. Or Google, my money doubled. It took 2.5, 3 years, but my money doubled. That's what I want out of a name that I know is going to be there. So Molina Healthcare is down. Yeah. So I'm seeing that in the chat. Molina's
Yeah,
down 30%.
CNC is down as well.
Coin is getting smashed. So Reddit, did they announce? I think that's an announcement today, right? It's up a little bit. Yeah. So maybe we could take a peek at that if we have time. All right. So Verizon's been looking good lately, man. Verizon's been looking real good. Okay. So I wanted to look at Google Alphabet because Google Alphabet announced yesterday and it got put into kind of a bad situation. It dropped in the open at the open, and then it really recovered nicely. That recovery is real good. I think people wanted to own Amazon, Alphabet, excuse me. So judging from where we were, I'm liking what I'm seeing there. Okay, so let me try that again. I clicked the wrong button. And look at the volume. What kind of volume are you seeing on in the last 24 hours on Alphabet?
They were about 2x. Yeah, right at a little over 2x. You can see the volume here. Look at this enlarged view of the last few days here. They dropped down to as low as looks like about 306 or so. And that was intraday. They opened at about 312, it looks like. And they ended up closing the day at 331, right at the 21-day moving average.
Yeah.
Money
So we've got
flow, yeah, money flow went from neutral to positive. So you can also see the accumulation has an uptick here.
Mhm.
So people even though it was a sell-off day, I think people wanted to get back into this name.
Well, Mike, the dividend investor guy, was like, "Yeah, come on down so I can buy it." Remember that?
Yep,
Maybe
sometimes you
Mike, the
don't
dividend
get
investor
long to
guy,
do.
is the one that led the charge on the buying. All right. All kidding aside, we've got a question on Amazon that I want to give a response to. None of this is ever financial advice, but do you think Amazon will go down further? So my answer is no. And the reason for it is kind of like what I saw with Alphabet is there's a lot of buyers of Amazon. If people want to sell, got it. I can understand why. And if they there'll be a lot of people that are going to buy the stock, is what I'm expecting. But let me turn it over to you. What do you think? How would you answer that question?
They did get down to 161 at the tariff announcement. They're right at the 200-day. During the tariff announcements and leading up to it back in February or March in 2025, they got down below the 200. That's during 2024, there was a period of time where they were under the 200-day rather. And then I'm sure if I go back to 2022, which I hope we don't repeat, but they spent almost the entire year. In fact, it was over just about a year under the 200-day. So barring an event like 2022, I don't expect them to be spending that much time below the 200-day. And I don't necessarily think that this year is set up like 2022. There are some similarities, but the earnings projections and what have you for this year are better than they were back then. So I'm not anticipating that. I am anticipating a lot of volatility for the first 9 months of this year, 9 or 10 months. The end of the year, I'm expecting us to have some pretty good markets at that time, but it could be painful at certain points between now and the midterm elections. There's just a lot of things going on right now with new Fed chair. Markets like to test Fed chairs when they're put in place. So we have that. We do have some stimulus from tax refunds that's going to be coming in. We have tax law changes that affect businesses that are coming in, but some of that can just take a little while to get the market to get figured out. And then they are really concerned about all this CapEx, but I'm putting my trust in these guys that run these companies because I don't think they're all wrong. They can't be all wrong.
All right. So I'm trying to find a story that explains the big sell-off in healthcare, but
I'm not seeing one either.
Okay. And we tried another way. So what, it was Molina Healthcare, right? And what is Molina
MOH.
Okay, well, their forecast, low profit. Okay, that's what's ailing this stock. So this is unique to Molina.
Check CNC out because they're down as well.
%.
They report in the morning.
It might be because, thanks to Molina,
yep,
they're crashing and burning. So they're like, okay, well, all right, let's go through some other stocks that announced. Reddit is up a little bit. Looks like the news was okay. Fortinet, Peter weighing in. He likes seeing Fortinet up 9%. It was a stock that I really liked months ago. It was not doing all that well. I started to sell this stock off, and it's had a nice run lately. I'm glad for anybody that owns it. But you see, it was, I thought, an opportunity, and maybe it still is. It's up to $85 a share, so it's probably going to be up here. If it could keep going, we got something. Just software, man. Anything that is software right now, I have to say that I am a little shell shocked. I'm not touching any stock where its primary product is software. Let me just go to this little, handy dandy chart. Let's go to the 1 year. This is not pretty. This is just getting destroyed. Salesforce down 45, Adobe down 31, ServiceNow down 40. These software stocks are getting smashed. So I'm not touching them until the market figures it out. I figure it out. Somebody figures it out, but I just can't touch them right now because I can't explain it. Dave is flourishing. Look at that. This is Dave's style, Go up or down 10, 15%. Set 177, so the stock's going to still be in that kind of consolidation zone, but they're having a good night. Well, March 12th, what's going on? Why are they rallying so much? Is there something that's not being reported? Are they going to be acquired? And we had a question from Peter. He wanted to know if you could take a look at the technicals on Credo Technology.
Oh,
and these guys do high-speed connectivity solutions.
Yep. Yeah, I've owned them in the past. I sold out way too early.
Look at that. All right. Well, let me kick it over to you. Let's take a look at Credo.
Yeah, I don't even know if I have a chart for them, but we can look them up real quick.
Oh, and while you do that, Dre, ServiceNow, symbol NOW, they are predominantly a software company, a software as a service company. They do predominantly service based workflows for their software. Oh, so Dave preliminary reports, huh? So they kind of let everybody know that the news was good. Okay.
So, yeah, I can't remember when I bought into this company. I was just playing it for the momentum for a short period, and I sold way too early. I think I sold it around 118 or so, and they ran up to 213. So this is a very small company. Their primary customer is Amazon. So if we just look at the 1 year, they had a great run off the tariff announcements, and then they consolidated from September all the way through first part of January, and now they've definitely started on a sell-off. They are oversold. PPO is in bearish territory. We have seen distribution since September. We have a 50-day that's declining, the 21 days declining. 200 days starting, looks like it could start rolling over here pretty soon. So let me put my cursor where it is trading today and just kind of look to the left. And what we see is we do have a little bit of support here, but we have broken the 200. Next level of support would be about 75. So if it keeps dropping down, then 75 is where I would think about maybe moving back into this one, although it is pretty high risk. Well, it's 17 billion is a large cap now, right? I thought they were small, but I think they only have really one customer.
It's a large small.
Yeah.
Man, this one's really tough to price because the stock price is so high compared to its cash flows, and its earnings per share is pretty elevated as well. All right. So good question, Peter. Okay, good. So let me turn it over to my screen. So Credo is like super high growth. They're going to more than double this year. So this one's going to be a tough one to model, but let's kind of go Let's go with it.
I think Amphenol is probably more well diversified
Mm-hmm.
and might be a safer play than this one, but this one was fun while I was trading it last year.
Yeah. All right. So on the earnings per share side, no, let me look at cash first. Yeah, I can't get there with cash flows, and I'm getting over my skis on my forecast. And now let's look at earnings per share. So trailing 12 months. So I gave him a 48 PE. Yeah, that looks good. It's a special company. There's no two like this one. And it prices out on earnings per share, but not on cash flow. Because they're young, they're little, and they're growing. Over time, they're going to grow that cash flow, but the stock has just moved so fast. This all happened in 2025. Jeez. That's a big move. Gigantic move. All right. So Amazon, we went over their numbers. It is a hard one to figure out, but that has been Amazon's legacy is they care what Wall Street thinks, but they don't do what Wall Street wants. Here's an example of it. So we got to treat it differently. And they have the credibility to do this. It's not like, hey, they've never done this. This is weird. Nope. They've done this over and over again. This is who they are. And we'll see if the market is going to buy into the stock. It certainly has over its history. And if it becomes $1 trillion business that is growing at 11% and it starts to really, it continues to be profitable, I want to be an investor. That's going to be my plan. All right, sir. Well, I think that covers it. Thank you so much, Daryl, for joining me and co-hosting the
Thank you,
watch
Victor.
party.
It was great to be here.
Everybody, thanks so much for joining. I appreciate it. Thanks for joining today. And for those that doubled down and joined us on Alphabet, thank you for that as well. You guys have a good night. We'll be back in the morning streaming at 9 a.m. Eastern if you want to come in. And there was a couple of comments out there. I know one for sure. I want to explain something so that you don't leave without an answer. I think it's Vikram W. You wanted me to look at build.com. And the rules on the streams is if you're a member, you can ask for stocks and I review them because you're paying a membership. And if you're not, you buy a $5 super chat. So I wanted to explain why I didn't cover it. And sorry, it took me a little while to explain that. And I appreciate you attending. All right, everybody, have a good night. Let's see where the market trades tomorrow. It's been a rough week, right? So hopefully things get better. But if they don't, let's look for those opportunities where we can invest and make money over time. Have a good night, everyone.